Kristen Genovese.
And I'm Karina Carter.
And we are
your hometown mortgage experts.
Hey, we're excited to be back with you. It's been a while since we've talked with you, but we have a special guest with us today. She is none other than Karina Carter. She is the president and CEO of CMS Mortgage Solutions. She's come to our studio today because we have some exciting news to bring to you about one of our favorite loan programs.
Yes, so Anthony, we're going to talk a little bit today about the VA loan program and how the changes are going to affect everybody. So can you tell me a little bit about what the VA loan program is?
Well, the VA loan program is something that was created specifically for our men and women in uniform. A huge benefit for them to be able to affordably buy homes with, in most cases, little to no money out of pocket.
So most of the time they get in with zero down payment,
No
correct?
down payment, that's right.
And then another benefit for the VA loan, Kristen, is what?
No mortgage insurance.
No mortgage insurance. So in order to not have mortgage insurance and to be able to do 100% financing, then VA does what?
Well, they've created the funding fee, which is a small percentage that is added to the cost of the loan, which goes directly to the VA to help defray any costs for any losses that are associated with failed loans.
That's perfect.
But most importantly, it allows them to be able to stand behind the veteran and guarantee that loan for its full term.
Correct. So in guaranteeing the loan, it guarantees them 100% financing, no mortgage insurance. So it's been one of the only programs forever in my 23 career that you could solidly do 100% financing for the veterans. Only in about 23 years has the funding fee changed maybe 3 times, maybe 4. So come January 1, it's a huge change to our market. So do you want to tell me a little bit about that, Anthony? Why is it going to change? Let's go with the good first.
Well, I think one of the things that I'm really excited about is the fact in years past, veterans that were serving as reservists had to pay a little bit higher fee than a regular military person.
So regular enlisted, active duty,
Right.
full-time. Why would that be fair? Not fair, right?
Not at all.
Not at all, Kristen.
They're
So
still on the line for our country, regardless.
right, they're still fighting for us. So now, how does that change?
Well, the good thing is there will be no distinguishment between a standard military regular enlistment versus a reservist. They will receive the same benefit and they pay the same funding fee.
So they don't have to pay extra to get that loan, whether they reservist or enlisted, active duty, full-time.
Right.
That's great.
Right.
Yes.
So that is one of the most positive changes in the funding fee in years. Now, let's go to a little bit some things that we may not like as much, but we have to keep up with the times. And what happens with foreclosures, 100% financing, is we want to make sure that the veteran also has a little bit of skin in the game. So VA wants to introduce a little bit of extra on that. So the funding fee will change for our reservists and regular duty military for first-time use, second-time use. It will not change for your VA refinances on streamlines. What streamlines are, they can reduce their interest rate without having an appraisal. So Kristen, for first-time use, what is the change for that veteran?
So for loan to values of 95.01% to 100%, it's 2.30% now funding fee
Instead of?
instead of 2.15.
So for first-time use, it's going up 0.15, which doesn't seem like a lot to some. So it's not a drastic change, but it gives that the veteran and VA the cushion for that guarantee there and kind of keeping up with the times.
Adding one thing to that, one of the beautiful things about the funding fee is even if the veteran is financing 100%, they will allow them to include the cost of the funding fee in their financing. They don't have to pay that out of pocket.
Correct.
Or you can
great
pay
point.
it out of pocket if
Great
you choose
point.
to.
So you can finance it, or you can pay cash for it and pay it out of
Correct.
pocket.
Right.
So you can choose to do either or.
Right.
So then next up, Anthony, is second-time use.
The second time use, the increase is slightly, a little bit more. It's 0.3% increase from 3.3 to 3.6.
So it's still a benefit for them if they want to do the VA cash out or second time use of buying a second VA home. So we know that you can use your VA 1 time, 2 times, 3 times. It depends on your eligibility and your debt to income ratio. So again, it's going from 3.3 to 3.6. So keep in mind, those changes will incur an extra cost for the veteran, but they still are eligible for all their same benefits that they have. And what we haven't talked about, Kristen, is if the veteran is disabled in any percentage according to VA and awarded that, then the funding fee is what?
Exempt.
Exempt,
So there's no
which
funding fee at
means
all.
they don't pay any funding fee at all.
And
So
100
that does not change. correct?
what's the minimum requirement for the funding fee calculation, where they get the funding fee waived?
Pretty much VA is not issuing, as far as I'm aware, they're not really issuing anything below the 10% standard. So meaning that they're going to, if they receive any type of disability awards letter, they're typically going to
Be 10%
be
or above.
eligible to be able to be 10% or above.
Correct.
From our experience. And then we still keep up with the same great benefit. If that veteran is awarded 100% disability, they are exempt from also paying property taxes. Now, keep in mind, for that, it does come with a little kind of kinks when you go to buy, because what happens is you don't own that property until you actually purchase.
Right.
So call us and we'll give you the information on how that works, who to talk to at your local city, county office, so that way you could also put in for being exempt currently or on a new purchase as well too.
Correct.
So any other changes that we can think of, but this is a major one for January 1 for our
Yes.
veterans. So a lot of agents, real estate agents out showing houses now, we will, as a lender and mortgage broker in your local area, we will start disclosing to the veterans these fees in December in case of weather, prolonged contracts, repair negotiations, anything else that would go past January 1st, because most lenders are enforcing, as of January 1, the new note date of that mortgage, the changes to come in. Do you not agree?
Yes,
I think that's
100% correct.
So we just wanted to come to you today, give you all the news, good and a little bit of bad, but still the positive for the veterans, that this loan program is the best out there for you.
Absolutely.
Because you can still put down payment money down, correct?
You can still put money down,
And
and
if-
that lowers your funding fee.
And that would lower the funding fee as well too. So we want to thank you for joining us today.
We want to thank Karina for jumping in
Yes.
and sharing her very wealthy wealth of knowledge. We appreciate you coming up, and look forward to speaking with you more as we go into this holiday season. Wish you the best, and we'll talk to you again very soon. Again, my name is Anthony Campbell,
And I'm Kristen Genovese,
And I'm Karina Carter.
and we
We
are
are
your hometown mortgage experts.